They say Nigeria's inflation remains under pressure from geopolitical tensions in the Middle East, disrupting global energy markets and supply chains. In its May policy brief, CPP notes headline inflation rose to 15.93%, driven by higher crude oil prices, shipping disruptions, and import costs. He however, says monthly price pressures are easing, with inflation slowing to 1.75%, while food inflation moderated to 2.98%. The report says food, transport, energy, housing, health, and education account for about 87% of inflationary pressure. Food inflation at 19.96%, that remains elevated due to insecurity in key farming areas, disrupting output and supply chains. The CPP calls for a focus on insecurity, logistics, energy, and transport infrastructure to address cost-driven inflation. All right, let's unpack the latest data now and how it impacts the commodities market. We have Halima Adediran, the senior analyst at Financial Derivatives Company, joining me via Zoom. Great to have you on the show, Halima.
Thanks for having me, Ladi.
Yeah, it's good morning. It's another one. And, we were celebrating, getting sub 20%, for that's inflation, headline inflation and core inflation after rebasing. So rebasing, that's behind us now. So we have the latest data, continuous rise, three consecutive rise, monthly rises, therefore, inflation. How significant is this latest one?
Okay, so thank you for that breakdown. When we look at the headline inflation, we see that it increased marginally to like 15.93, while the month-on-month dropped, but it's still giving us the fact that there's still rising prices, though at a slower pace. And when we look at the food inflation too, we see that it is mixed when we compare the annual and the monthly. So also for the core inflation month-on-month increased, while for the annual, it dipped significantly. So, and this is pointing to the fact that inflation drivers are more broad-based compared to what we used to have that is solely on food and or energy prices. And so this is raising a concern as regards the sustainability of the disinflation process that we recorded in the previous months, and the reminder that the battle against inflation is not yet won. And so it could mean that the monetary authorities are facing a fresh challenge when it comes to inflation, because when we see what was highlighted by the MBS, we see that the key drivers were food prices, transport cost, and service inflation, which is a broader aspect when it comes to accommodation, rent, labor cost, and all other things that has to do with services. And so this is entrenched in prices generally. And so when we look at all this, it means that it could have different implications for households, for companies, and even for the monetary authority. For the households, we could see cutback in investment in savings, less of discretionary spending and impulse buying. And for the business, we might see that the consumers becomes more price sensitive, and they might not be able to really transfer all the additional costs to consumers. So that could eat deep into their profit margin and also affect the general aggregate demand and economic performance. And so for the monetary authority, we will see that going forward, they would like to check the fiscal spending trends and exchange rate movement, and even the prices before they could make a move when it comes to interest rate decision. So the risk scenario for now is that if the easing is not sustained, the global tension easing is not sustained, we might see a spiral or reemergence of price volatility in the coming months. However, if this tension is eased and is sustained, it's likely that inflation will be sticky relatively, but going into the end of the year, we might see a gradual reduction in the general price level of goods and services. So that is where we are for now.
Right. So this latest data, how would you say it's impacting business confidence and investment decisions, in Nigeria? Do you think foreign investors, do you think they care much, about this data?
Definitely is one of the data that is looked at when it comes to investment, because price has a long way to dictate what the demand trend will look like. But given the fact that the increase is not that significant, it is marginal, though it is the third consecutive increase. It might signal that there is imminent price pressure that is still elevated, though at a lower pace. But success has been achieved in terms of taming the prices to a large extent. So it's not really a bad outlook for the economy, and it's not signaling a bad economic situation for investors that are willing to come in and to invest in the country.
Halima, thank you so much. Definitely we'll keep unpacking this latest one, see how the MPC reacts in their next meeting. Thank you so much, Halima Adediran, Senior Analyst of Financial Derivatives Company. Thank you.
Thank you for having me.
All righty then.